With the market pumping today, I'm going to be going through my buy plan, which alts I'm looking at, and whether I think a bottom is in or not. Today's episode is dedicated to you guys. I'm doing a Q&A, and I've picked my favorite questions of Twitter to answer today. I picked 7 questions, and I'm also going to be taking live questions from the chat. And we're going to have a discussion about everything that you want to know in this market. It's going to be a massive show. Let's get straight into it. The first thing that I want to touch on is this announcement that BlackRock is actually launching an institutional trust for spot Bitcoin exposure. So a $10 trillion fund is what BlackRock manages in totality. They are now launching an institutional trust for spot Bitcoin. Now, just to put this in comparison, the total Bitcoin market cap is $500 billion. BlackRock manages $10 trillion in assets. So the entirety of Bitcoin only equals 5% of the amount that BlackRock is actually managing. So to put it in perspective, BlackRock is a big player from traditional finance. And I think the allegiance here is quite bullish for the future of crypto and Bitcoin specifically. Remember, they're only 5% the size of BlackRock. That's Bitcoin relative to BlackRock's size. So we just have to understand the magnitude of how big this announcement actually was. Will said, I thought BlackRock was supposed to care so much about ESG that they would never touch Bitcoin. I thought institutions getting active in this market was just a meme. So many signals to the rest of traditional finance space about this being a legitimate asset class. And I think irrespective of what BlackRock does, whether they actually allocate even half a percentage of their assets to Bitcoin exposure or crypto exposure, I think the main thing it does is it kind of paves the way for other institutions to start getting involved with crypto. The more names that are attached with crypto and that are aligning with crypto, the more it becomes normalized. And I think bigger than anything, despite the speculation as to whether BlackRock will actually use investor capital to deploy into cryptocurrency, more than anything, I think the brand awareness and what it does for the narrative of the space is it goes above all. So that's why I'm bullish on this announcement as a whole. And I think it's one of the reasons why the market has been pumping. Will said he thinks BlackRock is probably the most bullish news for a long-term Bitcoin holder ever, not just the news itself, but the signals that the water is fine to others. If they don't offer their clients Bitcoin, they'll get their lunch ate. That is kind of true to an extent. It kind of does incentivize these other institutions to start considering Bitcoin. And obviously clients also clearly want this offering, because at the end of the day, it's up to BlackRock to offer services to their clients that they are demanding. And clearly there is a demand for institutional Bitcoin. If you're an institutional investor, it still isn't as easy as a retail participant to get involved in the crypto space. So announcements like this do help. Is it the be all and end all? No, but it is definitely a contributing factor behind why we got the pump yesterday. And I'm going to go into exactly the reasons why we're pumping, because that's one of the Q&A questions. But we are still as the TLDR on the charts, we're still printing higher lows on the Bitcoin chart. We did make actually a higher high here very briefly before the reversal. On the daily, it looks a little uglier. We got this massive wick up to the top of this major support trend here. And we can see that there is still room for downside in terms of, getting a major pullback. Potentially the 23K region is very possible. But overall, we can't deny the strength that the chart is showing right now. So, I mean, the market is in very good health in terms of its market structure. And it does look like the floodgates are open here for a push to the upside, which would obviously result in an explosion from the altcoins. Today is about verifying the best way to actually play that narrative. And what better way to do that than asking you guys yourselves what you would like to know. So I went on my Twitter. I said, doing a Q&A on the stream tomorrow. Drop your questions below and I'll pick 10 to answer live. Just remember, make sure to follow me on Twitter. There's a link in the description, because I'll be doing this once or twice a week in future. I think it's, quite a good show model to interact. So make sure you're following me on Twitter so you don't miss these questions, so you can actually go and ask your questions so I can answer them live on the show. Without further ado, let's get straight into it. The first question is, Solana take profit? Well, I have a chart for you to show you if you are in a Solana bag, and I think this is also relevant to a lot of other altcoin bags where you could potentially be taking profits. So we had our limit longs at around 39 to 40. Then we had our FOMO bids, so the next level of buys. Now we are in the middle of the FOMO bid and the closed leverage zone. So obviously this now becomes your stop loss if you're in a leverage trade. The closed leverage long zone would be at around $47, and then you would obviously close the rest of it at the limit short zone and continue and consider flipping short. Obviously, that's major resistance. That's the Solana chart for you guys that would like to know. Next question. Since they did not hike the interest so much to fight inflation, what can we expect next? To control inflation, they normally need to hike the interest much more. Now, this is a question that requires a little bit of nuance, but I'll do my best to break it down in the simplest way possible. They're saying, what can we expect next, presumably from a macroeconomic standpoint? Well, the important thing to note is that inflation actually came in at 8.5% versus the expectation of 8.7%. So the Fed has one goal right now, and this is all you need to know. The Fed's goal is to lower inflation. If they see inflation coming down, that is a signal that they are doing and executing their job correctly. So as long as inflation is trending downwards, they're less likely to aggressively hike rates. Now, with the next FOMC in mid-September, it gives us a little bit of breathing room now before the next rate hike, of which we have an indicator now through the CPI that potentially they won't be as aggressive. Now, does this signal a full-on pivot? Certainly not. 8.5. I mean, it's only 0.2 under expectations. Although it's positive for the market, it's not crazy, but I think it does allude to the fact that inflation is coming down and markets are forward-looking, right? So the markets are factoring in this trend going forward, that potentially that future months will also trend downwards, which would inevitably result in a Fed pivot. So are we getting a pivot now? No, it's unlikely. Could we get one in the future? I'd say yes. I'd say the Fed is kind of cornered at the moment with this very aggressive monetary policy. There's not really much they can do. They can't really afford a market crash, especially not before midterms, which are in November. And they certainly don't want to see equities tanking too much. At the end of the day, a healthy stock market is beneficial for most of the people in power, most of the people with money, and they're the ones that end up controlling the country at the end of the day in terms of power and business decisions, etc., without getting too political. So equities in the long term tend to trend upwards, although in the short term they do want to lower inflation because wealth disparity is still a massive issue in the US. So we do have a little bit of breathing room now. As a quick summary to your question, with that CPI coming in at 8.5, so that was a positive thing. Remember, just before I get into the next questions, the banter competition starts, I think it's tomorrow, which is very exciting. I get to kick Ran and Sheldon's butt. If you're not registered, make sure to register. Link in the description because you can win up to $100,000 in cumulative prizes. It's very, very cool. You can see the details of the prize pool below. We are giving out, this is the biggest giveaway I think we've ever done. Obviously, we're doing it with BYBIT, so you will need a BYBIT account to get involved in the competition. And I'll be streaming my trades live on Instagram after the shows because that's something that I like to do and kind of trade along with you guys a little bit. And maybe I'll share them on the shows as well. I'll share kind of like my main trades here to keep you updated every day from this trading challenge. So yeah, link in the description to sign up. You'll need a Banter BYBIT account. You get a $4,200 sign up bonus if you sign up for a BYBIT account. So I recommend doing that if you want to get involved in this challenge. It's going to be a whole lot of fun. And by the way, on the trading front, before we get into the next question, we absolutely nailed this near trade. So congrats to everyone that got in this. I did a show, I think like about a week ago where I said that I think near will be one of the best trades of August. And I said I was loading up at this zone. So this horizontal zone on the Bitcoin chart is what I was buying at on the 4th of August. We could see from the 4th of August, we should be up quite nicely, like roughly 20%. So yeah, roughly 24% from the 3rd. So that, is quite a nice result for anyone that got into that trade. So congrats to you guys. For the ones that missed it, watch the show next time. We still go through trades here. I may not be Sheldon, I may not be Carl, but I try my hand at trading when I can. And obviously with the near conference coming in September, second week of September, this trade kind of rose to prominence a little bit in the hype to that. And I think there is still a little bit of room to run here, but there is many questions on whether we have room to run. So let's just get into those instead. When will you call a bottom? In my eyes, the bottom was 17K. We've been going through every disaster possible. If not, what can bring Bitcoin to 12K? This is the biggest question that I got on my Twitter. Is the bottom in? Is the bottom in? Are we going to get a bottom? When will you call a bottom? All those sorts of questions. I think the obvious answer is yes, a bottom's in, but I think it requires a lot more nuance to that to actually understand what time frame we're looking at here. And I have a controversial take compared to most influencers based on where the bottom is. The first thing to understand is that we had unprecedented liquidations. The Celsius liquidation, which was obviously brought on by the 3AC liquidation and insolvency, which was obviously brought on by the Luna collapse. All these collapses that happened after and after and after each other were probably the worst set of events events we have seen in a long time. It was an absolute catastrophe. And at the time, I think a lot of us weren't realizing just how bad those liquidations were. The forced selling on the market was unprecedented. It's probably the most we've had in the history of Bitcoin, at least in many, many years. And the sheer size of the companies that were toppling down like dominoes is crazy. Like 3AC managed a multi-billion-dollar fund. Celsius had multi-billion dollars in retail money. Luna was over a $30 billion project. Like, these are big numbers we're talking about. Some numbers that we haven't seen in crypto before. So we had unprecedented liquidations. Part of the reason why the Bitcoin price took such a major hit, this was the liquidation. So you had Tesla selling, Elon Musk selling in June. Then that also happened in tandem with the Luna collapse a little bit earlier. Then it took a little bit of while for the 3AC collapse to set in, and then Celsius, etc. And that resulted in this big final leg down, which ended up being a 45% drawdown in Bitcoin, which historically for Bitcoin is quite a large drawdown, down to the 17.7K level. That was a massive drawdown, and that was off the back of liquidations. Now, there is a little bit of hope, because obviously we've rebounded from that and we don't have the same sell pressure that we previously had during that liquidation event. There is a statistic which indicates that the bear market could be over. Now, I don't want to get too crazy or too hyped or anything, but I'll just show you the statistic and then I'll give you my take on it. It's the S&P 500. We know how correlated Bitcoin are to stocks. If you have been tracking stocks and tracking the stock market and trading that against Bitcoin, you would be doing quite well, using the stock market as your guide, because crypto has been so correlated to the macro. This is the most correlated crypto has almost ever been to the macro. It's the opposite from the decoupling. It's the coupling, because the S&P and the NASDAQ is essentially dictating what the market is doing right now. And the stock market is being dictated by the Fed's policy, monetary policy that we got into a minute ago. So looking at the S&P gives us a great indication as to where Bitcoin is going next. Now, I have an interesting statistic. The S&P 500 has never experienced new lows after a 50% recovery, meaning every time the S&P 500 has gone into a bear market can be defined as a drawdown of 20% or more. Every single time it has dropped over 20% and reclaimed 50% of that drop, it has never gone on to make new lows in its history. Now, of course, past performance is not indicative of future returns, but it is quite a startling statistic when we put it in context, because that means, theoretically, if it reclaims 50%, Bitcoin, as it's correlated to stocks, is unlikely to see new lows. Now, unlikely doesn't mean it can't happen. Of course it can happen, but we do have to trade on percentages here as investors. We have to use to the best of our knowledge and give our best guess as to where the market's going. We don't operate in isolation. We take all of this data into consideration. This is just one indicator as to whether the bottom is or not. Now, let's check on the chart where we are. The S&P 500 is currently up roughly from 36.4 to 42.07. Now, this bounce actually equates to a 45% drawdown from lows. Now, in totality, it's 15%, but then the drawdown was obviously 24%, but then on the way up, the percentages skew based on the relative data. So if we look at this chart based on the high to the low, the 50% mark would come in at 42.31 at this level here. And I'll draw it in on my chart for you guys, so you have it here, 42.31. There. It would come in there. We need to close above that level for it to reclaim 50% of its value since the drop to actually trigger this condition. Now, we did wick above yesterday, but we've come and closed down below on the daily. If we look at the 4 hourly, we know we are below this as well. Obviously, this is an arbitrary indicator to some extent, but it is giving us an indication as to the historical performance of the S&P. I mean, if we do close above this line and recoup 50% of the value of the loss, then it's unlikely that we see this new low below 36.36. Historically, it has gone down and tested lows, but it hasn't gone below it. And that's a very interesting statistic to indicate to us whether a bottom is in. The other thing to note in terms of whether a bottom is in is the unprecedented amount of capital that's sidelined. We know that institutions have $23 billion worth of dry powder, according to Crunchbase's latest report. Dry powder is deployed usually. If it's a VC, they will use it to deploy into new crypto startups. So they don't necessarily all market buy. Some of these definitely have Ethereum exposure. Some of them have exposure to Matic. and other altcoins, which they do market buy, but not all of this $23 billion goes into the open market. Some of it obviously goes into ecosystems. I would make the argument, though, as I said on my Twitter, that direct investment in ecosystem development should, in theory, attract users to that ecosystem. We know how strong development is a driver of adoption in terms of creating better dApps, applications that users like to use. So theoretically, that will attract users, and theoretically, like the ETH Merge trade, they actually do end up market buying at some time. So I do think the amount of sideline capital here does slightly limit the extent to how bad this bear market can get, at least for now, considering a lot of these institutions have been pragmatic with keeping a lot of cash. Now, I know myself, as someone that's holding a lot of cash relative to my portfolio right now, I know I'm taking that approach. I know a lot of my friends in crypto are taking that approach. So just anecdotally, plus with the data here, we know that there is a lot of sideline capital right now, and there's a lot of capital waiting to enter and waiting for the right time. Now, I doubt the smart money FOMO's in at the top of a rally, but it's interesting to note that there is a little bit of a backstop now after a lot of these guys have been stocking up on cash. Becca has a contrary opinion, which I somewhat agree with. He says the system's fundamentally broken. China's about to implode. He doesn't think the lows are in. So he's going against the S&P. He doesn't think the lows are in, and that there's a massive influx of cash sidelined due to printing that are rushing back in right now, and will get swept out when the system breaks, when the big, great long buy occurs. So he thinks that there will be a push up in the short term. Then he thinks that macroeconomic factors, the system breaking, he says, will result in a massive dip. And that's where he's doing really long spot buys. He says there's a massive opportunity to make a lot trading mid to low caps here for the rest of the year until I'm wrong. Low capital 5 to 10x plays that will give competitive returns. Instead of keeping 1 million in Bitcoin for a 2x, he's allocating 200 into mid caps. If we roll to 30, if Bitcoin 2x's, they will 10x. Okay, so Becca, he's a controversial guy. He says a lot of bold statements on Twitter. For the most part, I would agree with this. So what he's saying here is that altcoins will outperform Bitcoin if we get this rally. That's basically a given. Historically, altcoins have vastly outperformed Bitcoin. If you're in the business of making money and making it quickly, of course, you're exposing yourself to more risk. So that is one thing to note. You are historically better off in altcoins than Bitcoin. Now, historically means the last 4 years. Obviously, before that, Bitcoin was the major performer. We haven't really seen the altcoin system economy is the strongest it's ever been in terms of development, in terms of institutional backing, in terms of narrative. It's a little bit different to like 2016, 2017. But the altcoins should, if all other things are equal, irrespective of any crazy black swan that happens in terms of Bitcoin, should pump harder than Bitcoin itself. So that is obviously the strategy if you want to make money in the short term. But do I agree with this thesis that the lows aren't in and that the money is rushing in temporarily and then we're going to go back down? I subscribe to some of it. I think that the market is getting a little bit euphoric. I think that there's a large chance we can push up to 28K in the short term, and retail isn't even in yet. If we look at Google Trends, retail is basically at the bottom that it has been at in months. It's basically at an all-time low for interest in terms of people Googling crypto. So if retail does come back in, this thing can push up to 28, 30K. Smart money will be cashing out at that point. So this does give us a little bit of leeway in the short term. I'm going to say like 1 to 2 months to actually make some profit off these trades. Now, the thing is, the market is following the Ethereum chart. Because the Ethereum merge is the narrative that is pushing a lot of these altcoins ahead, specifically the ones that have been outperforming like the ETH L2s and the ETH ecosystem coins, a successful Ethereum merge equals successful altcoin performance. So we are relying on the Ethereum merge to go through as scheduled at the end of September and not have any issues. If that is the case, then yes, I think the market definitely can rally because Ethereum is leading the market and the market is following Ethereum. Obviously, that's what that means. So I'm looking at the Ethereum chart right now to substantiate whether we do get a sustained rally. Right now, it is looking quite strong. I'll get the ETH chart up for you now. We are continuously printing higher lows. We broke through this major orange box. If we go into the 4-hourly, we can see that we are still in bullish structure. So we can come down and test, which I'm expecting now, of the 1810 region before I continue push up to the 2K region, which I do think is a high likelihood. But Becca thinks that the new lows are next year. And I would tend to agree with him to some extent. I think there's definitely a possibility of a rally in the short term. And my personal thesis is, and I could be wrong because I'm not a fortune teller, but my personal thesis is a strong 2022, or at least a strong few months, and then possibly a larger drawdown into 2023. Maybe that's Q1 2023. Maybe that's Q2. We don't quite know when that'll line up. It's impossible to pick the exact month. But my general thesis, the way I'm trading, is rally and then major pullback. And by major pullback, I mean we could test the lows. The S&P indicates the lows are likely in. I would largely subscribe to that theory. I think it's possible we get new lows, but I don't think it's impossible that we retest lows or at least come down close to retesting lows. Now, this is great for us because we have an opportunity to make money in the short term. Anyone that entered the trades we've been talking about for the last month is now significantly up. We've been talking about the ETH Merge trade. I've been stacking ETH and ETH ecosystem. I stacked some NEAR last week. We're heavy in spot, obviously, so we're in a good position to actually capitalize. And a lot of you are also heavy in leverage trades. We're already capitalizing. Start taking those profits in the next couple months. Start getting some dry powder on the side in case we get this major pullback. If we keep rallying, you'll get an opportunity to get back in on the retest. The thing is, in this market, there's always new opportunities. I think that's the thing people discount. They let FOMO overtake them and they see prices pumping and they don't want to miss the pump. There's always another opportunity. Even if you miss a 100% pump with an altcoin, there's always an altcoin that's just one day away from pumping 100%. And it's our job as investors not to FOMO, to stay pragmatic, to look at the market in a level-headed sense and make decisions based on our intuition and not based on price. So don't let price affect your intuition. And that's why I'm sticking to my plan of riding some of my spot bags up, taking some profits, and then hopefully looking to reaccumulate next year. Does this mean for my long-term bags I'm not accumulating? No, of course. With the altcoins you've got a long-term time horizon with, let's say 2 to 3 years plus, you can afford to DCA and not really worry about price and consistently buy and implement a plan to keep buying quality projects that you know will be around next cycle now. We don't know exactly what will be around next cycle, but we have a good indication that Solana's not going anywhere. We have a good indication that NEAR protocol will be a great hedge against Ethereum. We have a good indication that Thorchain's not going anywhere. And we certainly know Ethereum isn't. So we know which altcoins, or we have a good idea as to what will be around. There will be new narratives that pop up that no one expected. That is why you need to keep cash on the side, because we can't predict accurately in 2 years which will be the projects that succeed. We can guess, we can bet on L1 ecosystems, which is the least risky way of getting that exposure. But in terms of getting the hot narrative that can do that next 1000x, you need to have cash, because if you don't have cash, you won't have the opportunity to get into those opportunities as they arise. So it's very important to keep cash on the side. This is one thing I'm really trying to do over the next couple months, is make sure my stablecoin balance is extremely strong to actually capitalize on any dips that we do get into 2023, which I said I am expecting. Could I be wrong? Yes. Could we keep rallying? Yes. But I'm preparing for the scenario of this being kind of like a fake out pump and then another dump down. That's the scenario I'm preparing for. And just sharing what I'm personally doing in this market. Some other questions. And I do have my altcoin list that I'm looking at as well at the end of the video. Hi, Miles. These crypto projects will make regular income. How do the token holders benefit from this? They don't pay dividends. Okay. Real yield is probably the biggest narrative that I've been talking about for the last couple of days. Some of you may have missed the shows. Real yield essentially operates on the premise that protocols that generate revenue are stronger than the protocols that aren't generating revenue and are going to provide higher returns to investors than the Ponzonomic emissions-based revenue systems that we saw in 2021. So I've got my thread pinned to my Twitter if you want to check it out. This goes through my top 10 picks in the real yield sector. This person asks, which projects that make regular income, how do token holders benefit? Well, in the case of a lot of these real yield projects like GMX, GLP, and GNS, these projects actually pay out revenue based on their trading fees. Now, we know in highly volatile markets, the more people buy, the more people sell, the more the market goes up and down, the more revenue these exchanges actually make. That's why I think the perpetual exchanges that offer leverage trading, the ones with the good interfaces that are attracting users, will be the strongest performers. Because at the end of the day, they're the ones that are capturing the upside of volatility, especially if we get this rally to 28K. Then those will be the ones that capture this upside because they will be generating more revenue, which will cause people to FOMO in because you can actually stake to get a percentage of this revenue. Now, my favorite on the list right now is GMX, and it's not GMX itself. It's the token basket that lies underneath it that I like. This is probably my favorite DeFi play right now, and I'll show it to you. It's under the Earn tab of GMX. If you go into GMX and click Earn, you can see that you can earn a 19% on Arbitrum, and on Avalanche, you can earn a 19% as well. Now, this has come down because a lot of people are staking. This was closer to 50 earlier in the year. It's likely to go back up again if we get a pump. And essentially what it is it's a basket of goods. So if you invest in GLP, it is a liquidity pool. So what it does is it pairs all these tokens together. So if you buy GLP, you get exposure to Ethereum, Bitcoin, Chainlink, Tether, DAI, Frax, etc. It all baskets it together based on the weightings that you can see outlined here. This is on the Arbitrum side. And this basket of goods is how GMX actually facilitates swaps. So in order to shorten the length between swaps to offer cheaper swapping fees and deeper liquidity for you, they rely on stakers of the GLP token to get liquidity for these tokens. So essentially through GLP, what you're doing is you're providing liquidity to the platform and you're being incentivized with Ethereum rewards to do so. Now, are these Ethereum rewards just coming out of thin air like all the DeFi protocols last year? No. Those Ethereum rewards are actually being generated from real trading revenue. Hence my thesis that if trading volume continues to tick upwards, then GMX stakeholders will earn more. And obviously, the more stakeholders, the better for the platform, the more exposure you get to GMX, because a percentage of the payouts are also in GMX tokens, which you can lock for escrow, etc. That's a topic for another day. But GLP, in my opinion, becomes a very safe, relatively safe compared to other DeFi protocols, way of getting exposure to a broad basket of assets that should perform pretty similar to Ethereum and Bitcoin. I would be shocked if this basket on Arbitrum and this basket on Avalanche significantly underperform Bitcoin or Ethereum. My thesis is that these assets perform pretty closely to Bitcoin and Ethereum, and in that sense, there's no opportunity cost versus investing in GLP and getting a 20% yield versus holding ETH. Now, of course, there's smart contract risk, etc. There's other risks, but at the end of the day, if we look at the assets like for like, it should perform pretty similar in tandem with Ethereum and Bitcoin, considering you do get this 20% yield. So that is one place I'm allocating capital, and I'm holding obviously some of my GMX tokens because I'm bullish on that platform gaining steam as a whole. So in terms of projects that capture value, Real Yield's one of them, and that's how you differentiate it. Are they generating revenue? Are they making regular income? And two, how are they paying that to their users? Yeah. What's your profit taking strategy? I just told you guys I'm taking some profits over the next few months. If a project doubles, take your principal out. That's a very easy bull market way of taking profits. Different projects can have a different percentage based on outlook. So this is a more complex version, but if you have Ethereum, you may want to hold that for longer. You may have a longer time horizon on Ethereum. So you may only take 20% for every 50% increase in price, for example. You have to outline this yourself based on your goals. If you're investing in a Phantom or a Moonbeam, slightly riskier risk profile, you may take 50% for every 50% increase in price. You have to weigh that up based on each investment, but I think this is the mistake a lot of people make. You need to have individual take profit zones for each project. Don't think of it linearly. Don't just invest with a linear take profit system for everything, because some projects require a little more care and attention, especially the riskier ones, than something like an Ethereum will. So just remember, anytime you invest in a project, set your take profit zones. This is the most important lesson that I could give in terms of taking profits. Every time you invest in a project, write down what your take profit zone is, write down what your condition is for your thesis being invalidated, and write down what your stop loss is potentially. What I do on an Excel is I have all my holdings mapped out on an Excel. Next to it, I have all my take profit zones. Next to it, I have my time horizon and my risk rating. So my time horizon outlines how long I'm holding an investment for. Don't just invest blindly. Don't just buy Ethereum because you think it's cool or you think the merge is happening. Actually outline your time horizon. How long are you holding this? Because that will dictate A, how severely you take profits, and B, how much capital you actually allocate to that asset. So as I said, I got an Excel. I write down my time horizon next to every project before I buy. I write down my risk rating before every time I buy. I scale this 1 to 5 based on low risk to high risk. That's how I do it. You can use any system you want as long as you're tracking this stuff, because don't invest blindly when it comes to DCAing. That is the stupidest thing you can do in this market. It's so adaptive. Things change so quickly. You need to have very strict conditions to when you invalidate your thesis and when you actually add more to your bags. The next question is, this guy said, come on, pick me. I literally sacrifice 2 hours of sleep every day to watch the stream at 5 in the morning. We're running out of time, but I'm going to go quick. What would a role for decentralized stablecoins in real yield be in DeFi? I think with the collapse of Luna, it does certainly indicate that We do need algorithmic stablecoins. I think that there is still a huge demand for stablecoins in the market. Now, people might be thinking, what do you mean the collapse of Luna? Didn't that prove that decentralized stablecoins don't work? No. Just because one failed doesn't mean there isn't a need for it. I certainly think there's a need. In fact, now I think there's an even bigger gap in the market. We've seen what happened with Tornado Cash. We see what's happening with the erosion of privacy and the integrity of decentralization amongst crypto. We need stablecoins that aren't in control of a centralized entity. My favorite is FXS. It's called Frax, and Frax Share is the token that captures the value of that ecosystem. I'll do a future video on this, but that's the one that I would buy in terms of getting exposure to that narrative. He said, do you believe in the multi-chain or cross-chain one? I've talked about this a fair bit. Vitalik said the future is multi-chain, not cross-chain. I would agree with him to some extent. We want to invest in ecosystems that are interoperable and have their core focus as interoperability. So the two key ones are DOT and Atom or Cosmos. They're the two obvious plays to capture upside to this narrative, but there's a lot of intricate ones involving like things like Stargate, things like Rune. There's cross-chain bridges and stuff that operate with slightly different mechanisms to the one Vitalik was alluding to. But I would say the easiest way is to invest in Rune, because that is going to give you the non-custodial swaps. Interoperability, I'd say DOT over Atom. Not because I don't like both. In fact, if you can hold both, hold both. But I just think DOT captures value a little bit better, despite the Cosmos ecosystem probably being a little bit better than DOT itself right now. I've already talked about a lot of this. You guys know what my buy plan is. I'm DCAing into alts long term with a 2 to 3 year time horizon. Anything that is less than a year time horizon, I'm not buying now because I think we'll get better entries than today. So if your plan is to hold an altcoin for less than a year, then there's not much of a point in buying today, in my personal opinion. You can start DCAing just in case as a hedge against a huge rally. But the reason I say that is because 1 year isn't really enough of a time horizon to substantiate DCAing. In my opinion, it's multi-year. And when we look multi-year, you have to look at some of these safer assets. So we can look at Bitcoin, Ethereum, obviously being two that we know are going to be around in a few years. And then you could start looking at some hedges. Obviously, the Ethereum ecosystem is very strong. And with the upgrades that are coming, the merge, the surge, the purge, the verge, and the splurge, the 5 big upgrades, Ethereum is only getting more scalable and faster. But as a hedge against this failing, because it could at the end of the day, and a hedge against Ethereum's vision, because there are altcoins which will come out with better technology and that already have better tech than ETH, you want to hedge against it. So I'm going with Solana, I'm going with Near Protocol as kind of those major individual single state ecosystem hedges against ETH. There's many other hedges. AVAX that is kind of going for that not interoperability, scaling through subnets. So they're going after security using subnets as a proxy to scale. You've got Polygon Matic that's interlinked with Ethereum, but it slightly differentiates itself. You've got exchanges like FTX, and then you've got BNB. These are the safe ones that I like. There's many other altcoins which I've talked about a lot. I'm into GLP at the moment. I like Fraxshare, FXS. I have a little bit in Phantom. I have a little bit all over the place, but those are like the key ones that you need to know. And in the future, I'll give you like a full list, but those are the ones I'm buying now, I guess, with that long-term time horizon, because right now in the short term, it becomes a lot harder to kind of dictate where the market is moving. But in saying that, you guys know I am in quite a few spot longs, quite a few leverage longs at the moment to capture upside from the merge. If you missed out on these short-term plays, because I know a lot of you aren't just investing long-term, you're also investing short-term, then I would look for a major pullback. Buying ETH on diagonal support here is not horrible at 1800 pre-merge. I think ETH could definitely crack 2000 heading into the merge. So 1700, 1800, then as to a lesser extent, 1600 are okay positions to load up spot. They're also okay to load up leverage, not financial advice, as long as your leverage is low. So maybe 3x leverage plays, open, no stop loss or with the stop loss at like, let's say 1400 in validation, with the ideal goal of selling into the merge hype. I don't think the full hype of the merge is priced in, because I think a successful merge is not being priced in. What's being priced in now is the date of the merge going ahead. Now, the date sticking the same and the merge being successful are two separate events that I don't think are fully priced into the market. I think it'll only be fully priced in once those two events occur, and that means obviously higher Ethereum prices. But there are no guarantees to occur. There can be delays, there can be issues, and that is what gives you exposure to the downside. A lot of us don't want exposure to that downside, but that is realistically what will give us exposure to downside if it's delayed or if there's a huge failure. I'm betting on my thesis being that there is no failure. We have to trade one way or the other. You got to take your pick. That's where I'm taking my pick, and that's where I'm placing my bets. Let's see what happens over the next couple months. We're already doing extremely well on our trades that we opened from a couple weeks back. So good job to everyone in those trades. And let's just stick to the process going forward. I'll answer a couple more questions in the comments just quickly. Video went longer than I expected. How much was the dressing gown? It's not a dressing gown. It's actually a jumper. I do have a similar gown, but this one's a jumper. No Polygon. Absolutely. Polygon's fantastic. Polygon is fantastic. It's one of my favorite projects. You're giving me the urge. Don't FOMO. That's the number one message here. I said in the video, I do expect us to come down at some point, whether that is towards the end of the year or early next year, maybe end of Q1. I do expect us to have that major pullback still. So there's no urge. The only urge is if you're short-term trading, then you've got a bit of an urge to get that entry. But if you are accumulating for like a 2 to 3 year time horizon, you can afford to be a little more selective. Ran the master of 600 tabs at once. He's teaching you well. Yeah. I mean, it really, it's good because it gives you a nice flow for the show, but at the same time, it is a little stress inducing, especially in the morning when your computer crashes. This happened yesterday and you lose all the tabs. Oh, it's so annoying. And Chrome doesn't restore them. That's the worst when that happens. How about Sol? Very risky, but I do like the gaming projects. I think they are some of the the long-term bets where you can just chuck in like $100 into each. Or depending on how much capital you have, obviously $1,000 into each if you have more, and you can kind of afford to kind of sit on them for a couple of years and see how they play out. Phantasma may not be the big winner. It may be GALA, it may be EOS, it may be Vulcan Forged, it may be one of these other exchanges or games, maybe Sandbox. But if you spread your bets across enough of these quality games, eventually you're going to capture upside to that next 50 to 100x. That's how Becca trades, although Becca is very ruthless on his short-term profit taking. So don't forget that, because that's a very important aspect of investing. It's not just holding forever. It's having that strict time horizon and be willing to sell. I'll do one more question. Back to 30% in stables. Was running 50, but much too bullish now. I'm over 30% in stables now, man. I'm like 40 to 50% as well. I am holding a lot of cash because, as I said, opportunities always come and there's no need to FOMO. There's always opportunities. Next year, you're crazy. No, I still think it's a very high likelihood of downside next year. I think a lot of us get blinded by short-term pumps in the market and get overly bullish. What about the black swan of Mt. Gox? Yep. The Mt. Gox thing is definitely a concern. I think that's one of the, I guess, quote unquote, black swans that could affect Bitcoin's supply. The only caveat to Mt. Gox is that I think it is largely priced into the market at this point. I mean, we've been talking about it for months. I had a massive thread on it. And also, not all creditors are going to sell. Like, they did a poll, and over 50% of creditors said that they weren't going to actually sell their Bitcoin when they received it. There's a lot of psychological arguments that go behind whether a seller would sell, or whether, a creditor would sell. I have a whole thread which discusses this. If you search on Twitter, Mt. Gox, MTGOX, Miles Deutscher, it should come up. And that's one of my threads where I go through all that psychology. But I don't actually think it is that much of a big issue. Before we head off, GALA Games. Wow. Firstly, I'm going live on Instagram after the show. Link in the description to join me there. Secondly, GALA Games is launching their new Film Nodes, which is a new film division. So you can actually earn yield for watching films, which will be very, very cool. And we have a little bit of a sneak peek to show you guys on today's show. That's GALA Games. Link in the description if you want to get involved there and pick yourself up a GALA node. They are quite expensive, but for those whales out there, it may be very well worth doing so. I want to keep this going, so I'm going to head over to Instagram right now to answer the rest of the questions, because there are quite a few coming in, and I want to answer them all. But I don't want to stream here for hours. So make sure to go over to my Instagram, link in the description, if you have any questions that weren't answered in today's video. And I will also randomly follow people that follow me back to show my support back to you guys as well. So yeah, link in the description to Instagram. I'll see you over there. Have a lovely day. Peace out.